Mr. Wall Street. My hustle get this money till the day that I die. I don't want them, I want the whole damn pie. You can see it in my eyes, I'm hard on the grind. Mr. Wall Street, Mr. Wall Street. My hustle get this money till the day that I die. I don't want them, I want the whole damn pie. You can see it in my eyes, I'm hard on the grind. Mr. Wall Street.
Yeah, my portfolio's diversified. Ain't got long money, your dough is circumcised. Vested in Euro yens, cop the Euro Benz. Used to have that white girl, you know that European. You something like a boss, even when the mic goes off. We good, my vested in Microsoft. They say patience is a virtue, we understand that. That's why it's cake up in my circle. And I'm climbing the charts, Dow Jones, victory lap. Then I get my bow on. While you chase bank, I'm up in Chase Bank. I live on Dun and Bradstreet, and I should thank Frank.
My hustle get this money till the day that I die. I don't want them, I want the whole damn pie. You can see it in my eyes, I'm hard on the ground. Mr. Wall Street, Mr. Wall Street. My hustle get this money till the day that I die. I don't want them, I want the whole damn pie. You can see it in my eyes, I'm hard on the ground. Mr. Wall Street.
Yeah, I'm on that money horse, American Express. Debitors, buried in your debt. I got a new, her name Merrill Lynch. She got me hooked and addicted like she was heroin. Bad credit, no credit line. You eating off your baby mamas, that fat line. You dudes are starving, no dinner time. I'm eating sirloin steaks and sipping better wine. I hang with brokers, they watch my cheddar climb. His shadow government, the Moorish paradigm. And this is for my legacy. I'm Mr. Wall Street, my money never sleeps.
My hustle get this money till the day that I die. I don't want them, I want the whole damn pie. You can see it in my eyes, I'm hard on the grind. Mr. Wall Street, Mr. Wall Street. My hustle get this money till the day that I die. I don't want them, I want the whole damn pie. You can see it in my eyes, I'm hard on the grind. Mr. Wall Street.
I hustle hard, I'm on my job. I got a new connect, his name Charles Schwab. Old money mixed with new like a rock child. A garden gecko with no financial lockouts. If I'm boxed in, then we gon' box it out. Like Mayweather versus Pacquiao, but I ain't backing out. I'm weighing in just to lay it on his chin. Plus it's a cash bow. Fat shouts to Michael Milkins. My stock market rap milking that cash cow. So how rich can they truly be when we were shown our vast estates but no Pajou Ali?
My hustle get this money till the day that I die. I don't want them, I want the whole damn pie. You can see it in my eyes, I'm hard on the grind. Mr. Wall Street, Mr. Wall Street. My hustle get this money till the day that I die. I don't want them, I want the whole damn pie. You can see it in my eyes, I'm hard on the grind. Mr. Wall Street, Mr. Wall Street. My hustle get this money till the day that I die. I don't want half, I want the whole damn pie. You can see it in my eyes, I'm hard on the grind. Mr. Wall Street.
Hey everybody, how's everybody doing today? Excellent. Typo 1 if you guys can hear me. Let me know you can hear me. I got a special gift for you today. I got a chairman in the building. Say what's up to him, B.
What's good, man?
We got a chairman in the building. I got Kenny in the building. Kenny, say what's up to him. What's good? It's really good. So we're gonna get into this pip talk. We've been given some pretty damn good signals this week. And last week, I think last week we really had, like, what was the batting average last week? We like lost 2 out of like 12. So you guys are very, very fortunate to be getting this juice that you're getting, okay? And we're going to continue to keep it coming, all right? So I wanted to start first and take a look at some of the setups that we had called out. We called out a few setups, and setups were pretty nice. We had pound New Zealand, which is working out. A lot of you guys took pound or CAD yen. Unfortunately, for some of you, you haven't been filled yet, which is a good thing. It's a really good thing. All right, so let's take a look at this news to determine what we have in our way. Right now, if you look ahead, with it being 7 o'clock, there's really nothing coming up in terms of major news for us to worry about. We did have New Zealand a little earlier, but if you're in trades and you're going to be going to sleep, holding the trades throughout the night, you want to make sure that there's nothing coming in while we're sleeping. A lot of you guys are going to be knocked out cold at 1:30 a.m. tomorrow, okay? So pound has CPI, consumer price index news coming out. If the numbers are around exactly what they forecasted at 2.2%, then we won't see that much movement in the market. But if the numbers are greatly different from what they're anticipating, then the market will have to make up for the discrepancies and the disparity from what was forecasted versus what actually came out. Now, outside of pound, you've also got CAD. CAD's got core retail sales at 5:30. Okay, so this means that a lot of you guys that are going to be knocked out cold, you have to make sure that you're tightening up your positions, making sure that you're managing your trades effectively, or at least setting some kind of alarm to wake you up to see if your trade has grown enough legs, moved away from your entry to move your stop loss to break even, or just kill the trade entirely. We have a big Fed meeting. We have an FOMC meeting, Federal Open Market Committee meeting tomorrow. And this is a lot of bond tapering and bond buying that goes on during the FOMC meetings. You'll typically see a push in the US indices, and the dollar typically can take a hit sometimes, or typically can go the other way, but it either way creates a big, perfect storm, so to speak. The market moves. Now, outside of that, we don't really have much to worry about as far as news is concerned, past our pound, CAD, and the dollar at 11. Now, if you go back to today, you do have room to take a trade now before we get to 1:30, before you have to close. So you got some time for the trade to grow some legs a bit. Let's go straight to some of our trades that we've been in. I actually want to go straight to CAD yen for starters. All right, I want to go to the 4-hour. Now, the reason for the entry was here, okay? Let's bring this all the way across. So my reason for entry was here. Now, I gave you guys a sell stop entry, which means that I wanted you to enter right there with your stop loss just above there. So with the sell stop entry, price was going to have to drop below and make it to the downside to actually fill us in. Some of you are already in the trade, okay? I know that a couple of traders, based on seeing the signal, when I gave it to them directly, they took the trade as it was. Just keep in mind, though, that it's not completely done until we take out the pivot here, or until we go past our dotted red line. So for now, it's still bearish. If I go to our higher time frame, let's take a look at why we were looking at this and what we saw, so to speak. So for starters, you can see that I'm sitting right at that moving average, the 8-period moving average. I'm also sitting at an area where there's a ceiling, okay? Price is a nice ceiling where that roof, you can treat it almost like if you take a ball and throw it in the air, hits off that roof, it may have a problem getting past it. So with us being below what was support and now it's a ceiling, I'm a little more bearish than I was before. If I go to the daily, you can actually see if we take the measured move, let's grab the tool here, and I'm going to start with, let's start with this move right here, just to kind of give the average move to the upside. Damn it. Let's grab it. There we go. What the hell? Why is it not moving? I'll draw another one from right here. I don't know what the hell. I think it's, oh, okay. Thank you. Wait, to unlock it, huh? Oh, you know what I've been doing it for 2 days? I'm like, seriously, you gotta thank me. He done solved the puzzle. I pushed the lock. Let's use this one first. I pushed the lock so it wouldn't move. So now it should move when I unlock it. There we go. So if you look at that move, you can see it's a relatively the same what? Thank you. Beautiful. So it's relatively the same size as that move there, right? So if I take this back, I measure the move, you get around the same movement from the bulls. Look at the ebb and flow from the bulls. Whenever you get a pullback, if I go from right here, get rid of this one. So if you go from where it popped all the way to where it stopped, you can see this represents the bull's move. It's the bull's oomph. Think of the market as an ebb and flow. If the market ebbs and flows, think of it like our lungs. When our lungs breathe and expand and contract, they move the same distance unless we're short of breath. So if the market is a living, breathing mechanism, you would expect it to ebb and flow in the same size moves, the same movements. So you can see here, bullish move there, okay? This move there, relatively from the bottom all the way up, it represents the move that the bulls have shown before they start to show some exhaustion. You can also see that if I blow this up, you can see that we have a nice little drop in here and then this ceiling, this roof, right? So you ever stood up and then hit your head on something, not realizing that it was a little closer than you anticipated? Well, if price continues to go up any further, it's going to hit its head on this little roof here, so to speak. Now, going down to our 4 hour, you can actually see why we liked this here, why we wanted to short. I gave you guys a sell stop. This means a confirmation entry. That means that if price action happened to continue, you're not filled. This is another example of I set my alert here. When trade actually, when price gets to that area, I'm now moving my alert to where my stop loss would be, and then I'm placing the trade. Once I place the trade, if price action hits my alert before it fills me, I'm out. So I want to make sure you guys understand this. Let me back up a second here. So type of one if you guys are in the trade already. You guys say the screen's frozen? Hold on, let me turn off the screen and show it again. Hold on. Yeah, if you have that issue, then reconnect it, all right? So a lot of you guys probably have a pending order on CAD yen, but have not been filled yet, right? So this protects you, because if price wipes through this area and continues, then you don't have to worry about being filled or having a losing trade. But here's the issue. If you place limit orders all over the place, you're going to run out of margin, okay? You're going to run out of margin. So what you want to do is, instead of throwing out these orders everywhere, the best thing you can do is place alerts. When you place the alert, you're notified when price gets there, and then you can place the trade. I'm going to type in here, they've got an app called Call Levels in the App Store. You can use it for any market. Call Levels will allow you to set an alert on a trade so that you can be notified when it gets there instead of sitting there looking at it all day long like a fool, like some of you do. I know it. Now, moving on, let's see what's moving today. So right now, we're going to go to the indicator just to be able to plot the biggest mover. And if you notice right now at the top, you had CAD yen. We got CAD yen at the top on the weekly, but pound yen is the biggest mover for the daily. If I go Control F, let's go GBP, JP, bingo. Ooh, I like this one a lot. So you got 2 green, 1 red. So it's overall bullish. That's all I need to get from it. I know it's moving, so I'm going to go pound yen now. All right, bingo. So we're bullish. The chart's now showing a move to the upside. You can see why we got a bullish signal or a bullish indication on the daily, because today has been kind of bullish. You've started to form a little floor in here, right? If we moved below, this would be a ceiling. Now that we moved above, it is a floor. So I'm going to go to my higher time frame and see if I can maybe find some confluence with what I see there. Now, if you look at this, for a lot of you guys, you probably don't see this or recognize this as anything, but it's a bullish area. Why? Because price exploded to the upside, and with these candles giving us the push they did, there's typically unfilled order left there. And then look what happens. This is a weekly. It came, and it didn't just stop there for no reason. I want you to think of this like a little pocket on a pool table, right? B, you play pool, right? You ever seen the ball where it goes and it doesn't necessarily go in the hole, but it bounces and it comes back at you, right? Right? Or even like miniature golf, right? You play the miniature golf, the shit don't really go in the hole, but it bounces off the side and it comes back at you, right? So this is a scenario where we're looking at it like a corner pocket, right? Price comes into the corner pocket and you're expecting it to either bounce and turn around, or if it moves with so much velocity, you ever hit the pool ball so hard it goes off the table? That's velocity right there, right? That's that powerful movement. But we don't know what's going to happen until price action shows us with confirmation. So if we go to the daily, you can actually see a little bit further what we were looking at here. So I'm going to move to the left. And you can see here, this is much like a floor. Anytime you get a congestion of candles, it becomes support or resistance. The only thing that would determine whether it's support or resistance is going to depend on where current price is relative to those areas. So I'll actually point them out for you here with this little rectangle. So you got one there. You got another one here and another one here. These are all areas of support and resistance. It just depends on where current price is to determine if they're going to be an area of support or an area of resistance. Let me make sure that everybody's with me. All right. You guys follow me there? Type of one if you follow me. I know there's a little bit of a lag. Some of you guys are on your phone, so it takes you time to type, but I want to make sure that we're on the same page as it pertains to this, what I've drawn here. Okay, excellent. Thank you, Courtney, Jalil, Tots. Appreciate you guys. All right, so you can see that. Let's go to where current price is right now. I believe current price is at, let's see, current price is sitting at the green line. So I'm going to draw a line relative to where current price is so we can all see it. And I'm going to make this thing big. I want to make it red, and then I'll make it a little bit bigger, a little bit thicker. All right, so now everybody can see this, and we'll move it all the way across. All right. In fact, I should have did, instead of that ray, this one. Yeah, that's a little bit better. All right, so this is going to be reflective of where current price is. Now, if we take a look at it, right, if current price is sitting at 140.63, and this is a little test, all right? I want to ask you guys, because I like to include you guys, okay? If price is sitting at 140.63, then the area, right, I'll go over gold too, just give me a second. The area right here okay, would become what? Okay, it's an area of resistance. That means this area right here would be area of support. Here, this area here, area of resistance. Okay, so you go to current price, you can see this is no wonder why when price reaches this area and bounces off that level, you end up having a pause. Okay, now as far as an entry is concerned, I don't see an entry right now, so to speak, for this one. Now, someone asked me to go to gold. It's actually a good choice to go to gold because I want to talk about the trade that we had posted and why it probably is no longer, or it was no longer a good trade to be in. Okay, so we gave you guys a signal to take the trade down here at this level. And the biggest thing that was the reason why we took the trade was because we assumed there's some unfilled order flow right here because of how price exploded to the upside. Okay, now if you look here, you can see that as price came to it, we had this little area right here, which started forming this little area of, it was support when price was above it. Once we broke through, this area now becomes a ceiling. So it's only natural that when price comes in, it rejects off of it and gives us this nice little topping tail. This is a bearish sign, but the higher time frames have to be in line. I've got to have a bearish bias on my higher time frames. And we really don't have a bearish bias on the higher time frames. We also have to overcome this area of support. So it's very important you can understand to see why price starts to consolidate a bit. It did respect this trend line as well. Let's see here. Okay. It respected that trend line quite nicely. Okay. So you can see it's no wonder why it respected off of there. But if we go to the weekly, let's take a look here for a second. Right. If you look at the weekly, right now, we get a topping tail. Okay. And in a downtrend, you look at the current trend, it's just now forming the downtrend. Why do I say it's a downtrend now? Well, you got a lower high here. You got another lower high here. Now let's talk about lower lows. Price gave you a higher low there. It established an area here where it had a pivot. The moment that we broke below here, we have what? Our first lower low. Now, mind you, we need one more lower low in order for this to fully be a downtrend. Okay? Without that second lower low, it's not a full downtrend, but it's enough for us to start saying that this thing is starting to shift towards bearish. If our daily is bearish, then we're done. We're no longer looking to go long and we want to short this. Now, this is conflicting. Look here. Now, the daily sideways. We're down at the bottom of the range and we're starting to get bottoming tails after a series of red candles. So you could very much well start to see price move to the upside as it capitulated down here to the low. If I end up violating this bottoming tail, moving above this 200 period moving average, I would expect price to move up to around 1280 area on gold, 1,280 as you got the, good stuff, because we got really not much in our way. So it's looking real good to go long, guys, because think about it. Look at the whole area here. We're at the bottom of that range, right? And we got a nice little bottoming tail. Look at the bottoming tail. So this bottoming tail is telling you bullish. So for those of you that are trading on the lower time frames, you're more so focused on what your daily's doing, your 4 hour. If you entered on your hourly, you're really looking at your daily and your 4 hour. Okay. And the fact that we're at the bottom of this range, it's now time to go long. Just keep in mind, though, that we got to get past here. If we break past this trend line, you'll be looking pretty good. It's starting to really give you some bullish signs, though, to the upside. All right. So good one. I think you guys got that one from Brendan. So thank him for that one. Brendan, that was good money. Good money, right? Good money. I like that. All right, let's move on to the next one. Anyway, what else you guys want me to cover? I want to go kind of on your accord. So if there's some things that you wanted me to pull up, let me know. Yeah, there, Cheryl, there will be a replay. I usually put it on YouTube. Cash Swiss, Elijah? All right, let's do Cash Swiss. Cash Swiss. All right. Now, what time frames are you trading, and what time frames are you looking at or focusing on? Because, oh, I see you guys got a lot of them. Let me write these notes down. So you said US 30 you want me to look at, and you want me to look at Aussie, New Zealand. I see they moving today. They moving. Okay. So we'll get the Ripple in a second. Just give me a second there. All right. So what time frame, Elijah? Are you day trading or are you swing trading? All right, I'm going to assume that you're doing maybe a short-term swing. All right, so look here. If you say CAD Swiss, if you're going with, let's say, day trade perspective, we'll start with an hourly. Okay, let's start with the hourly. 1 hour. So right now, the biggest thing we want to look for is the area where you have unfilled order flow from the bank. I don't see anything close as far as bears, so I'm going to plot out what I see from the bulls. And then we'll go to the higher time frame to see what our bias is saying. Now I'm going to tell you what I like about this. I like how the moving average is sitting right there. Then you kind of got the trend moving in your favor. So this is good money right here. All right, I like that. Speaking Guapanese for those that don't understand, right? Linguistics, baby. So let's go to that daily, right? And you can see that the daily is sitting in an area that's bearish. And a lot of times, you guys, we can get conflicting signals. And this is a lot of things that will keep you out of trades. If I see a bullish entry on a lower time frame, and then my higher time frame signify bearish, I'm probably just not going to take it. So looking here, you can see that this area wasn't all that fresh, but you could see that this is a serious roof or a serious ceiling. So I expect it to possibly pull back a bit. Let me see what I got there. Yeah, ceiling, 4 hour. All right. Here's what you're going to do. If you want to short this bad boy, your trade's here. This is your trade, Elijah. Okay. If you're looking to short, I wouldn't short until you get about right up there. If you are going to be aggressive and you want to take a breakout trade, you can take a breakout trade if price fails to make it above 75.80. All right. So Elijah, your main area is to look at this area of resistance and see what happens when price gets there. Price could very much well fail to make it past here to get up here, which means just watch that area. And if you get a rejection and it starts giving you a reversal candlestick in your general area, you could short. All right. Moving on. Know that someone said Aussie, New Zealand. Does that answer your question? Pretty good. I gave you bullish areas too, so you should be pretty good for bullish. I mean, I like this down here in that general area. I also could say and make a argument for that area as well. All right. So good. We good, Jalil? Can you please do a quick recap of too many indicators? Don't indicate that they just complicate. Slow down, Cristiano. I want to see you slow down. I'll go over it if I can. I don't know if I have enough time, but I've gotten a lot of feedback on that Saturday call I did. That was crazy. Do I have any training videos, Ramsey? Yes, I have a lot of training videos. You just look me up on YouTube and stick to the Young Trilly Fam chat because you guys get daily updates in the Young Trilly Fam. And just Trade House in general. Those of you that are part of Trade House, you guaranteed to get the juice. All right, so just stay tuned. Aussie, New Zealand. Let's go to Aussie, New Zealand. I'm glad you guys are giving me some things to look at because I wanted this to be more about what you guys had bias on and what you guys wanted to focus on. So now, Aussie, New Zealand, starting on the 4 hour. I'm just going to be straight up with you and talk about what I like from what I see. And then we'll talk about bias, all right? So if I was to be a bull, I would be buying down here, okay? If I was a bull, I'm buying down here. Bears have two areas. I have institutional unfilled order flow up here, but there's resistance before this. Hold on, I'll show you. Give me a second. There's serious resistance right here. Here and here. So notice the difference between institutional order flow and resistance. Resistance has a lot in its way. If price comes down here and I expect to get filled, the only reason this trade would be an okay trade is because my stop size is small relative to where my first target would be. I've got room. When it starts to base right before my entry, it's no good. Let's move this one out the way and this one out the way. So these are the two areas that I would be looking to enter my trade, so to speak. You could also, if you want to, and say you're just not patient, you have to get in now, you could take something right there. But the reason I don't like this is because look at this consolidation. If I get filled and I'm expecting to short, I'm going right back into a wall, right back into an area where you could have problems trying to get past that. So I'm not too excited about it. But let's see what our bias is telling us. Ooh, this is bearish on the weekly. Certainly is, because you got a topping tail coming off of bearish engulfing. This is a very bearish sign, and you've had it for the last few weeks. So don't ignore those signs. Now, if we go to the daily, let's look at the daily. The daily is officially in a downtrend, you guys. It's not the best downtrend, but it's in a downtrend. I've got bottoming tail, but it means nothing to me because I see where the overall bias is. So I wouldn't be excited about going long. I'm more so excited about shorting up here, if anything. Now, for those of you that are super aggressive, you could take breakout trades from where you currently see price if there's nothing in your way, which means if you didn't have this ceiling in your way, you could take a breakout trade to the upside. Now, drawing this ceiling and going down to the smaller time frame, like a 15-minute, but I know some of you dance on the 15-minute, dancing with the devil. Let's get down here to the 15-minute. And really, we even load on the 15-minute. It's like, Reggie, what are you doing? We don't even go down here. So you could see that on the 15-minute, it gets real choppy, but you can at least see where your floor and ceiling is. I'm not saying it's bad to trade on these time frames when the spread's tight, but know your boundaries. If I know that this is a ceiling of mine, I can go long here expecting to have a target in that area. All right. I hope that helps. I'm on to the next one. Did I answer any questions on that one? On Aussie, New Zealand? I hope so. Let's move on. We had Bitcoin. Someone told me they wanted to look at Bitcoin, but then I also had US 30. Let's look at US 30, then we'll go to Bitcoin. I know I'm moving kind of fast for some of you too, and I apologize. Yeah. Let's see. Okay. Let's see. Well, you get it real raw here, guys. Now, I'm going to give you a serious rule here. Be careful trading any U.S. indice after U.S. stock market hours. I'm going to say it again. Be careful trading U.S. indices outside of U.S. stock market normal operating hours because a lot of liquidity dries up and falls off. A lot of the big banks aren't trading. So you'll tend to see moves just sit there and consolidate. It's very important you understand that. Okay? So right now, we've got price forming a roof. That's a serious ceiling, serious resistance. Okay? Now, I want to show you something. During normal operating hours, look what happens when you have unfilled order flow. Look what price does when it gets to an area where it respects it. Bam. See that shit? Came right in there and just, it's because when you see this, Price drops so fast that not all the orders get filled. When it comes back up, the unfilled orders that are left there end up triggering, which causes price to fall. If it doesn't and you see it go straight through, it's typically because the orders have already been filled. And then what does price do? There's no wonder it slows and just stops right here. Because look at all that. There was a ceiling. So are you going to go long in the face of that? No. To be completely honest with you, I don't like any of this right now because of the hours. But if I was to trade, I would throw volume on this chart. Because why? Volume does matter when trading CFDs. Volume does matter when trading in futures markets. So that means I want to see what kind of volume these candles have to see if they're there, if they're good. And ladies and gentlemen, this is good money. Okay? In fact, I'm about to give them a good lesson here. Check this out. Look at this. Look at this. Look at this. You see this candlestick right here? See this red one? How there's no volume in it at the bottom? It's because of its hours. Now look at this one. It was when the market opened. Look at the volume. The shit is good money. If there's no volume in it, you can't expect it to have significant amount of unfilled orders. So if I was to take this particular trade on US 30, I'm waiting for here, but I never trade them by themselves. Because they're correlated to all indices, we trade them together. So let's go US 30, NAS 100. And then we're going to look at the SPX, which is S&P 500, SPX 500. And I want to look at them all together, side by side. What do you guys notice? If we go on the same time frame on all of them, you notice that they kind of have a theme in common, right? Where all of these things will move together. Okay, now you can see here, we haven't made it up to the area yet. This one did make it up to that area. As price starts to turn, you can kind of anticipate what's going to happen. All right, so for me, I want to get an idea of how my trade looks here. So you can see we did not get past there. It's still good. Yep. That's still good. Good to go. I like it a lot, actually. So let's go back over here. All right. So if I was to do anything, I would short there. Why do I have a short bias? Well, let's look at the weekly. The weekly is at the all-time high, and then it rejected off its all-time high after it came up there, and that order flow had a lot of unfilled order flow in here. Look what happened when price came in this area here. You guys see this? It came in and rejected off of there, okay? And all of a sudden, we got a little push to the downside. But did we break through this low? I don't think so. Look at this. I want to bring it up real close. Look at this pivot low. Look how significant that was. In fact, I hope everyone's looking at this. You notice here we had on March 4th. March 4th, we created a pivot low. It reestablished the pivot low on March 11th. We then come back on May 13th. And you think it's a coincidence that we touch 25,210 and we bounce off it? It's no coincidence. It's no coincidence at all. Price respects that area because it remembers that area as a significant area. So what do you expect? You expect it to be bullish as it comes back there, but we're pretty far away. And now we're back to an area that has shown us a little bit of trouble to the upside. And this is some good money right here. I mean, I haven't seen it. I really, truly like this right here. I like this a lot, this area right here, as far as a bearish location. You also have your moving averages. So, I mean, it did get a higher low there, but so for those of you that are looking at US 30, wait for it to get outside of this general area. I would not trade on a 15-minute or even below an hourly on this because the spreads are very wide. And most brokers are going to require you to have a 10-pip stop at minimum on trading these CFDs. All right, let's move on. I think somebody wanted me to look at BTC USD. And you can see we dressed this bad boy up, didn't we? Before I get rid of my fib, look at the fib. Look how price is respecting the fibs. I drew this from like a week ago. And price did what? It comes right to the 618 fib that we called out last week, exploded, and now you see it bounce off the 382, come up above, and then do what? Now we're sitting at the 236. And now this whole area is nothing I want to fuck with. Excuse me, I just shouldn't even say that. I want to mess with it. Hopefully we can bleep that out. Excuse my language. But this whole area is ugly. It's consolidating. Now, if you are trading as a day trader on a smaller time frame, then I could take this whole area and I can go long down here and short up here. But if you are waiting as a big time trader, a trader that's trading on the higher time frames, you've got to wait for that pullback. I'm going to clean this up a bit, okay? And we're going to start Fibonacci from here now. That way we see what Fibonacci is saying from here, because it created this new low, bounced back off the high, and then look at that. What do you know? You see these areas where it's respecting, okay? We're bouncing in between here. So your only focus should be what happens in between this area and the break. If you want to get money on the smaller time frames, you can do so by trading this range, ladies and gentlemen. It makes sense? Look at this range, okay? That means that I wait for price to come down here, I'm long. As soon as price gets up there, you're shorting, okay? That's easy money. For you to sit back and trade when you see sideways action, expecting for it to go out far for a long extended period of time is not realistic. If we take and zero in, you can see why price is kind of rejecting off of here. Take a look at this. This is bread and butter. This is called an unfilled order by banks. Okay, you had another one down there, but it's sweet. It won't even get up there. So powerful, the price gets close and it drops to the downside. Okay, so what do I expect for Bitcoin? I'm waiting for price to break out or pull back. Listen again, break out or pull back. Why? Well, let's scale these candles. Look how parabolic this looks, okay? Now, it could continue to the upside, but if we go here to the left, take a look. Look here. What happened last time we got here? We rejected. What happened last time we came in here? It kind of paused a bit, and now we're under it. This is a ceiling. This ceiling, we kind of want to wait to see what price does. And if I bring it, look how far away we are from these moving averages. I expect price to possibly consolidate a bit while the moving averages catch up, or we get that pullback into our MAs. For now, we're respecting the 8. Okay, so I don't think that Bitcoin's giving me anything too exciting that I can just jump in and be gung-ho about right now. But if you do look, you see here, you got bottoming tails. What's wrong with mine? I think the battery went dead on this damn thing. There we go. All right. You got bottoming tails forming here. Okay. So mainly because of the 8. Price respected the 8. Okay. Closed below it for a brief second, but then we went back above. But now we're just trying to see what happens as far as the ceiling's concerned. Let me see what else. You guys wanted me to go to Ripple too, I believe. We got about 15 more minutes. And now the biggest thing is keep in mind that these things are all correlated to Bitcoin. Cryptocurrencies, mostly all of them are correlated to Bitcoin. This is very bullish right here. Very, very bullish. If you were to take the whole area, go based off of your Fibonacci retracement, you could take the area here, draw it all the way up, and you can see, voila, okay? So price kind of bounced off that 618, respected it, and then gave us a bullish engulfing. So we expect to see it move up from here. Go to the weekly See, the weekly's probably a little bit extended still. Let's see. So I would say, it is bullish. I mean, that's some nice movement by the bulls. I would say they flexed their muscles for real because they wiped out a lot of price action. We were consolidating from November, right? But actually beginning of December, all the way until last week. And then we exploded to the upside. This is very, very bearish. Okay. Same thing goes there. We rallied to the upside, didn't make it to the up, but we didn't break that low. Came back, respected off of there, and then we get the explosion. So here's a good question I hear a lot. How long should I wait for a trade, or the trade takes too long? If you look at this trade here, this trade right here, it took a long time, but it paid off. Look at that one. Now, this is a good example of it taking too long. Ain't no way in hell I'm going to stay in a trade for 2-3 months, let my margin be tied up, just waiting to get filled. But you can see that the unfilled order flow in here, that was the reason why we liked that area and why price came and bounced off of it and respected it. Look at it. And then exploded to the upside. So what do you got now? You have another area of significance that got created off of that, which is all right there now. This whole little area right there becomes good money. And I'm going to actually clean it up. Boom. Right there. You could take that as a new area. Really good area. I love that area. All right. Go back to our daily and see what you see in there. Yeah, but it may not get back down there. So I would say just expect a breakout from where you are now. So you can start to see that we're forming higher lows. And then you got a beautiful trend line right there. Look at that trend line. Oh, my goodness. Oh, my goodness. Oh, my goodness. In fact, look at that. So it's no wonder why it's bouncing. And then it's bouncing off the fibs. It's sitting there in between, I believe, the 382. If it can get past the 382, we'll see it explode to the upside, right? But where's the next area where you should be concerned? Right here. This is your area where I would say watch yourselves if you're long and you're still in the trade, okay? So see what happens with price as it gets up in that area, okay? But this trend line, that trend line is so fine. Ooh. I mean, you could do some things with it. Look, can you look at that? Oh, you see this? I mean, triple bottom. Bottom don't even know what a triple bottom is. Well, B, hot diggity damn. That triple bottom right there. Make me want to walk around the block. God damn. Woo! On the moving average. See that? This is Ripple. We're talking about Ripple just ripping. Okay? Gosh. So we talk about the daily. It created that range. Going to our 4-hour. Look at the trend line. Understand what it's doing to the trend line and how it's respecting it. And then on that 15-minute, if it comes back down there, it's good money, honey. All right, 10 minutes. Questions, because I'm about to go and break after this one. Give me some questions. Okay. Looking good, right, Ferris? Looking real good. Okay, what is it at the bottom? Which one are you talking about, FM? We may not be talking about the same thing. I'm not sure. Any questions for me? Usually you guys are little light on questions, and it typically is the reason why, it's mainly because I answered things fully going through the presentation, but I'm going to double back a little bit on what I was talking about on Saturday, because a lot of you guys have been asking me about Saturday's session. Give me a 1 if you want me to recap. But I know some of you guys I've been getting, like, a lot of you guys have been upset about missing Saturday. So I use the 821 and the 200. So, okay, all right, let's do this. So me personally, I love getting bucket naked, okay? Just love being naked. That means I like trading naked. No indicators whatsoever. That might be in my underwear sometime too, but I mainly just meant no indicators except a G-string. Okay, maybe a thong. Okay, the string is the moving average for those of you that kind of missed that and went over your head. Okay, so that's it. I just trade in my underwear. I don't have nothing else. Okay, I may add some extra things on the chart to check Fibonacci, support and resistance, and things like that. But there aren't my reasons. Brianna, you cracked me up. Look at that. She's tired. She said she's tired right now. They aren't my reasons for entering a trade. Okay. I use them to help plot areas where, you may have trouble getting through, so to speak. All right. Now, when taking a trade, understand that we take trades based off of signals. A signal can be, for starters, the safest signal is candlesticks, because all indicators move and react based off candlesticks. Next best thing that you can do is you can use the chart to be able to plot support and resistance and areas of unfilled order flow. From there, you can then go in and add in additional things to be able to help you, such as a pivot point, such as a Fibonacci or a Bollinger Band. These things help, but if we use too many of them, they can be conflicting. It's okay to utilize them to screen a market, but you don't want to utilize them as a signal to enter or exit the market. Okay? I can understand maybe exiting, but not entering, because they're lagging indicators. Okay? So we talk about one of these special indicators out there that has 5 entries or 5 confirmations before entry. If I'm waiting for 5 confirmations before entry, I am late and I'm missing the trade. Also, if I'm taking trades that are only giving me 10 pips or 7 pips for my targets, and I'm risking 50 pips for my stop loss, or I'm putting no stop loss, these are garbage trades because my risk to reward ratio isn't even established. In fact, if we've been talking about R and R, right? We've been talking about risk to reward for quite a bit now, right? So if I've been talking about risk to reward for quite a bit of time now, what kind of proper risk to reward ratio can you have going for 10 pips? Right? What is your stop going to be? 3 pips? What's the average spread? The average spread is 2 to 5 pips. If the average spread is 2 to 5 pips and you're going for a trade with a 10 pip target, it's BS. It's no good. It's ugly. It's an ugly trade. You don't want it. Think about it. A good risk to reward ratio is a 3 to 1 or better. Bismillah ar-Rahman ar-Rahim. 3 to 1 or better. Anything less is no good. Now, if I'm going for a trade that is giving me 10 pips target, that means my stop loss has to be, about 3 pips. Has to be 3 pips. It's no good. It's no good. Why? Because what is the average spread? The average spread on a major is 2 to 5 pips. What's the average spread on a cross pair? 5 to 8 pips. And what's the average spread on an exotic? Because I see some of you taking these exotics. It could be 20 to 30 pips, ladies and gentlemen. Okay? So understand that the spread is variable. If the spread is variable and my stop size happens to be smaller than the average trading range of the spread, I'm screwed going in. That means the moment I get filled is the moment my stop loss gets hit. I but wonder if that's ever happened to you before in your trading career. You get filled in a trade, and the moment you got filled, you got stopped out at the same time. And you're over there like, what? Right? What happened? I'm sure some of you have experienced that. So you got to let me check oil. I'll check oil as the last one. So I see oil. So daily. So oil's consolidating right now. You got bearish here. And bullish down here. Give me a second here. Bullish. So we got bearish here, bullish down there. These are the areas that I would be looking for as far as setting boundaries, so to speak. Now, some of you are probably wanting to trade that 15-minute. I know you are, just itching to trade it. I don't recommend that you do it on the CFDs. But that being said, on a 15-minute, you could short here, up there. You could short there, or you could also short here. That's a pretty good area to short as well. Okay. So that's pretty solid for those that are looking to go long. There's no long in anywhere close. Yeah, I don't see a long in sight. I wouldn't give you guys the long all the way down there. So you got bearish closer than long. So for those that are looking for a short-term trade on the smaller time frame on oil, you can take that one. For my swing traders on oil, if you look at that 4-hour, oh my goodness, let's see here. You're looking at it's range bound right now. Wait for oil to get down here for you swing traders to go long. Okay, that means 61. Let's just call it $61. When oil gets down to about $61, that's where I would be going long as a swing trader. As far as bearish, this really escapes a lot of you guys. These areas here, a lot of times you guys don't see these, but I imagine price will come. Look what it did when it respected it here. In fact, I'm going to show you. Notice how it kissed it. See how it kissed it and then turned? It fell off the map. That's a beautiful example right there. Kissed it, fell off. So now I say there's no more unfilled order flow there, but there is unfilled order flow up there because we haven't gotten there yet. So when price gets back up there, I would expect it to give me a retracement in that particular area. All right. So it's really good money there. If I go to weekly, the only thing is it was kind of parabolic last time I saw. The weekly is more bullish than anything. So if I were you guys, I would be more excited as a swing trader to be long. If you're a day trader, you can take the action based on what the daily is showing you now, which is bearish. Okay. So just keep in mind what the big picture is telling you is kind of how you want to play that. All right, we got one more minute. Any questions before I go? It is always a pleasure. All right. This is Mr. Wall Street. Okay. I'm in the trade house right now. In the trade house. In the house. The trade house. I'm coming to you live with Pip Talk. Until next time, ciao for now.